Amidst market turbulence, Bitcoin faces a steep decline, plummeting to $20,000. For investors, it's a rollercoaster ride of emotions, while some see it as an opportunity to accumulate before a potential surge to $70,000, others brace for further dips. As experts offer contrasting views, uncertainty looms over the crypto landscape. Don't forget to subscribe, like, and share, and let's start. So here we are starting off with, exactly 40 years ago today, legendary economist F.A. Hayek predicting the future of money. I don't believe we shall have a good money until we take it from government. All we can do is by a sly, roundabout way introduce something they can't stop. This is why we love Bitcoin. While you're scared, someone just bought $68 million worth of the Bitcoin, and that's massive. Look, I know Bitcoin is dumping right now, but let's zoom out a little. The yen looks like it wants to retrace the entire move after the Japanese Ministry of Finance intervened just 48 hours. Who cares? Well, that means Japan's currency interventions are toothless, and the Ministry of Finance's credibility is barely hanging on. $35 billion worth of intervention only bought Japan a couple of days. Pathetic. It's clear the yen will continue to crash unless one of the two things happens. Surprise Japanese rate increase. This would send global yield rocketing and likely force Fed Treasury intervention anyway. US proactively manipulates US bond yields lower. This would drive the dollar lower and relieve pressure from the yen. Today is the FOMC and Treasury's quarterly refunding announcement. Both are opportunities for the central planners to manipulate yields lower. Not to save Bitcoin or risk assets, but to save the US Treasury market from Japanese investors dumping treasuries after a forced Japanese rate increase. But what if they just let the yen collapse? Well, that would likely lead to higher Japanese inflation and even more reasons to increase Japanese interest rates. So the situation remains binary: debt monetization or debt collapse. Don't let short-term volatility scare you out of winning positions. A lot of people think macro isn't worth paying attention to, but this macro situation is exactly the narrative that's going to eventually lead institutional investors to differentiate Bitcoin from everything else. Bitcoin isn't just another attached play, and it isn't worth buying simply because there's a new ETF. The real narrative is that it's best asset to hold during the inevitable debt monetization that's needed to prop up the system. And these rough moments that lead to forced propping of the system will only shine the light even more on what's happening. I leave you with my favorite investing quote. During the dry years, the people forgot about the rich years, and when the wet years returned, they lost all memory of the dry years. It was always that way. John Steinbeck. Next up, what do we have here? This is officially the deepest retrace in a cycle, minus 23.6%. When in doubt, zoom out, and always when you see the drop, you always should zoom out and see what was happening before, and literally just notice that we are in a really great position as of the market. So is Bitcoin history repeating here? Watch my pinned post. Okay, that's basically what we see right here. Hong Kong ETF right now, and the US ETF before, and what happened after all. Next up, consider a broader perspective. There is no second best. Imagine selling 0.1 Bitcoin for $5,700 on May 1st, 2024 because BlackRock and Co. have managed to get you to throw in the towel and check off the topic of Bitcoin. $5,700 that 20 years later probably won't even be enough for a full tank of gas. $5,700 that you most likely won't have saved by then anyway because you've gambled it away, smoked it, drank it, or literally eaten it. $5,700 that could instead be a procession of 0.1 units of a global scale that a civilization of over 8 billion participants will use as a benchmark. 0.1 Bitcoin, which 20 years later will be the amount of universal money that millions of people globally will compete for by any means necessary. When 0.097 Bitcoin is the subsidy, then the new standard. Anyone selling 0.1 Bitcoin for $5,700 today is not buying $5,700. They're selling generational wealth. Don't sell your Bitcoin to BlackRock. You don't want me to be the one who sold generational wealth for a full tank of gas. Next up, what do we have here is, there we go for Bitcoin. I think the bottom is close. Altcoins start to wake up in their Bitcoin pairs, which means that their rotation is started. The bottom for altcoins is likely in Bitcoin pairs. Bitcoin dominance has likely picked. Just in $450 million liquidated from the Bitcoin market in the past 24 hours. The Bitcoin 1 week chart. As long as we stay above the 49,000, 52,000 key level to hold, there's nothing to worry about. I think we're currently in the wave 4, which will take approximately the same amount of time as wave 2. Be ready for tedious consolidation chop throughout this summer. Key moving averages to watch: EMA 21 and moving average 50. When wave 4 is done, long year longs in anticipation of the final wave 5. Bitcoin bottom closed finally in. The better RSI gives a red signal. In the past, this always signaled the bottom. Bitcoin is also moving on a trend line that has been in place since October 2023. Didn't think we would see such a buying opportunity again, to be honest. Yikes, Bitcoin is down, whooping 12% from its peak yesterday. It's another confirmation investors are forced to abandon their Goldilocks scenario of decent GDP growth, slowing inflation, and a series of central bank rate cuts on the horizon. The US GDP number, which was significantly lower than expected, combined with a significantly higher PCE core deflator, seems to have pushed investors over the hopium edge. Equities, bonds, gold, oil, and Bitcoin are all selling off. Let's see if and how Powell takes recent developments into account. Bitcoin to 400,000 or 20,000, why analysts cannot agree on Bitcoin's future. So the cryptocurrency market is experiencing downturn, with Bitcoins and Ethereum top player dropping by over 5%. After reaching a high of 75,000 in mid-March, the recent decline has sparked a heightened investor interest. Interestingly, the leading cryptocurrency dropped by roughly 20% over the past 3 months. As nevertheless, investor enthusiasm for Bitcoin persists. Ignore the short-term noises. Traders indicate that these fluctuations are short-term and view the drop as a routine correction in the market, and this was further confirmed by AMB crypto analysis of the reverse risk matrix. This chart assesses the confidence of long-term Bitcoin investors about the price. At the time of writing, the reserve risk stood at 0.002%, signaling confidence among the Bitcoin holders. So echoing similar sentiment, Thomas Facher, co-founder of Apollo, said price might fall to 40k but might rise to 400,000. That's just how it is. It is great, bad. And drawing in parallels with Bitcoin's current price and its recent all-time high, Raoul Pal added, "This is the fourth 20% correction in Bitcoin in 12 months. Pretty ordinary stuff." Critics being critics, however, skeptics like Peter Schiff maintains a bearish outlook on Bitcoin, predicting a return of to $20,000. To manipulate the price of Bitcoin higher, MSTR now owns 214,000 Bitcoins at an average price of 35,000. The average price was under 12k when Saylor first bought. When Bitcoin trades back down to 20,000, still a high price, MSTR will have an unrealized loss of $3.2 billion. That's all the information we have for today's video, and if you're interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.